everyone, welcome back to Infinity Wealth.
Wow, it's not been long since you've seen our faces, that's for sure. But I think, Martin, this is a video that I think everyone deserves because we've been talking so much about EVs, right?
Yeah, absolutely, mate. Give them the lowdown.
Wow, it's been a crazy sort of since obviously that we've released the videos for the EVs and again electric vehicles, so the NIOs and the XPENGs and everything. A lot has happened. And you may have seen. We'll show you some charts as well. You may have seen. We've had some retracement, some sort of pullbacks happening, and generally like sort of slowdown to the momentum that we first saw. There's a few things that we want to cover. Some of the reasons why we've seen these sort of slowdowns happening, but also, just again, remember coming back to what we were saying, guys. Especially the EVs at the moment, they are hot. So they're not your average stocks. So don't get deluded by this is a normal stock performance. This is something that's really trending, and what can
momentum trading.
Yeah, exactly.
Yep.
I mean, there's the same. I don't want to say it like in the same nature, but the same thing with the .com stuff, right?
Yeah, the Robin Hooders. Yeah,
exactly. That the hype is there, so we just want to put some realism into it as well. There's obviously been excitement with all the returns some of you may have made, and that we made. It's great, but we have to also, as investors, we have to stay risk adverse. We have to know what risk we're also facing. So that's why we really wanted to give you this update. So yeah. Martin will also chip in. We'll also hear some stuff from you in regards to what you're going to cover as well. So I'll basically start off with just updating you is basically the Chinese government, the Chinese state planner told the Chinese government to investigate a series of new energy vehicle related construction projects, which were linked to two major property developers in China. Now, these prominent developers both launched subsidiaries that aim to build and sell electric vehicles. And now basically the Chinese government has got some questions. And now it doesn't help companies like XPENG. Now, this is not to say XPENG and NIO related to this and related to all this going on, because the Chinese government gives certain restrictions and certain like rules to people who can and can't. Obviously, they have their rules and regulations in place, basically. So obviously, when something like this happens, we saw this with Bitcoin. Every company was producing their coin, taking out their own coin, and also there was no regulation in this stuff. Whereas in China, there's a bit, obviously in this industry, there's a bit more regulation. There's things that you can and can't do. And I don't think any old company who's got loads of money and loads of wealth can just chuck together some money and start saying we're producing EV. So they're investigating into it. As I was saying, it doesn't necessarily help that XPENG is actually launching a new factory as well, because that sort of puts them under the red light of maybe investigation. But again, there's no direct correlation between NIO, XPENG, and all this happening, basically. But as overall, it has hit the Chinese market. Investors they've laid off. They want to see what goes on. They want to see what the results are. But to be honest, Martin, I think it comes at a right time, right? The market's overall, right?
Yeah, I mean, I'm going to run through some charts. You're going to run through some charts. Yeah. It's a very good summary, Kiki. Yeah. I mean, there was a big pullback, but the other reason why the market has been driven up so much, and I don't know if I mentioned it in the last video or not, it's all to the S&P, right?
Yeah.
Here is a good investment tip for anyone, right? Doesn't matter where you are in the world. When a certain stock is introduced into, like let's say if a stock is coming into the FTSE 100, 250, or the DAX, or anywhere, or the NASDAQ, what you tend to find is there are ETFs that basically track, or they're called tracker funds, that track that ETF. So those tracker funds, in order to actually have them, they have to then buy the new stock, which is going to be introduced. Right. So wherever you find, and it's classic. It happens all the time. And if you're quite savvy, you can take advantage of that because you know that someone else is going to buy into it. So what's been happening is that with Tesla, people have just been jumping on the bandwagon because they know it's going to be introduced into the S&P. They know that all these ETFs, all these tracker funds, they need to actually buy Tesla. And Tesla is not a small stock. It's absolutely mammoth, you know. So they'll have to drop a certain number of stocks as well. But so with that balancing comes why the share price in Tesla has gone up so much, and obviously that's dragged the other EV stocks up with it as well. But yeah, I'll talk a little bit more about it, about you know, the fact that I think it's overcooked, but the time, you know, people have tried to short Tesla, but Tesla is such a stock that, you know, people just like to own it. They like Teslas, right? So it's it's more about passion. Yeah, people, Tesla followers are very passionate about their stock, you know, and sometimes the fundamentals, or I feel the fundamentals, have gone out the window. Yeah, I feel that, but I'm not, you know. Hey, it still goes up. So, but if you're going to short it, like if I was a betting man, and you know I'm a betting man, right? You'd never know before the 21st of December. I might make a bet with people on our channel, right? That I reckon, you know, if I short it here, I'm not saying to anyone short it, by the way. So hold on a minute, right? I'm not saying to you guys go and short Tesla or anything else. This is me talking. This is how I'm thinking. I'm thinking, you know, the run up to the 21st. What you'll find is that most of the tracker funds who needed to buy into it have already bought into it. You get the latecomers, the Johnny-come-latelys, who know nothing about trading, who know nothing about the market. They are, it's going to join the S&P, I better buy it. No, and then all of a sudden it falls because that buying has ceased. Everyone's bought what they needed to buy. Right?
Exactly.
And you often get that, you know, in IPOs. And I know that next week you're going to talk about some IPOs as well. But you often find that, you know, there's this.
Yeah, you know, I was gonna say, you saw, just to add in there, you saw that with the IPO with, what was it, XPENG or NIO? Which one was it? I completely forgot. Which one IPO? It was I think it was XPENG, right?
Yeah.
No, sorry. XPENG. So XPENG IPO'd in August this year. So you saw exactly the same thing, you know, like all this excitement is coming onto the public market, and straight away,
it's gone up straight up.
Same principle, right? Yeah, definitely.
Actually, I'll tell you a little story about. Can I just share a little story?
Of course.
I'm going to share my trading experience in 2000, right? The dot-com bubble, because I was trading big time. I was trading, right? And literally, you know, at the dot-com bubble, anything that with the dot-com would go up. Right, anything with the .com. It's like when cryptocurrencies came out. You know, anything that was, it had nothing to do with crypto, but if they put crypto on it, the stock flew. Right. What was happening in the .com? I mean, it's the same sort of scenario, right? What was happening in the .com was I had the Reuters news feed on my trading desks, right? So I used to actually say, this stock is going to announce this tomorrow, and I used to buy it. So before the end of close, I used to buy it, and I used to buy quite a large chunk of it. Then I knew that everyday person on the street would get their newspaper out and go, bloody hell, they've done this. But I already knew about it 24 hours before. I used to dump it. I used to make 7, 8, 10 grand like that, smacking it, right? Or I did get smacked around the face a few times as well. Right? But this reminds me of something similar, but because of the environment that we're in, that edge that I used to have, that edge used to be that I used to have a Reuters news feed, right? And the everyday layman person who didn't look at stocks didn't have that Reuters news feed. They relied on, they relied on the newspapers, right? Obviously, with the onset of internet, all that news is instantaneous, you know. So that edge went away. But I thought I'd just share that with you. You know, it just reminded me.
Oh, no, that's I didn't get a list of your stories. We got a lot to learn from them.
Oh man, yeah.
Fair enough. Yeah, no, that's awesome to hear. To be honest, I mean, that's the generation, obviously, that I was.
And I was a lot younger then as well. Yeah, I was a lot younger then. So I was probably a Robin Hooder in those days, right?
Yeah. All right. Okay. Cool. But yeah, no, actually, just on the point you were saying, like in regards to Tesla as well, like
Yeah,
just coming back to that, firstly, the reason why these sort of um, I mean, the realistic side of these companies is that there is a big mammoth out there like Tesla, right? Tesla could, especially, it could give NIO such a good run for its money on its home turf because it's preparing to launch the Model Y SUV, which, the reports indicate that it could be priced cheaper than NIO's
yeah,
entry.
that's what they're doing, right?
Yeah,
That's what they're doing. Yeah, yeah,
exactly. So in addition to the potentially lower price, but Tesla's stronger brand image. Don't forget that. That is massive. Like you say Tesla to someone, any average person, and you say NIO to any average person, everyone knows what Tesla is. Not everyone
no
knows
one
what
knows.
NIO is, right?
But having said that, Kiki, though, have you
Yeah.
seen the NIO cars?
Yeah.
Have you
Yeah.
seen them?
Yeah.
Right,
Yeah. Yeah.
they're fantastic cars.
Yeah. They are. They are. I
They
mean,
are luxury
you're gonna
cars.
get great tech as well, aren't you? You're gonna get the
Yeah,
fantastic, amazing,
yeah, yeah,
they can produce great stuff
yeah.
on much scale, on much larger scale. So, and I mean, we all know China, like they don't hold back for when they want advanced tech, even if it goes against like certain rules and stuff.
Yeah.
They're always going to be doing all this, the fancy extra mile things. But I think on a just basic level, I think the brand image definitely makes it more attractive. I mean, especially to obviously the mass market. I would say NIO is obviously not necessarily there on a bigger scale. The company was like NIO and XPENG both again scaling issues. Compare Tesla scaling to NIO and XPENG, it's no competitor. Again, Tesla's the mammoth. NIO had its problem where they recalled 5,000 cars. So the point is here, what we're basically saying, guys, is obviously like be very wary. Like we're not necessarily, we are not advising that this is the best stock in the world. We are not we're keeping you updated on this market. That's what our purpose is to keep you educated and updated. Everything that you do is your decision. You should get the right advice and education and everything to make these sort of decisions. And that is obviously what we're here to do, is give you this information, the updates on the markets, etc., etc. But like the risks have always been there. The bubble in the dot-com bubble. So there's people with higher risk appetite, like me and Martin spoke before. I'm in a position where I could put a certain amount and be like, well, if it fucks up, fine, I'm happy to lose that, whatever. But I'll be happy to bank on it with this amount, basically. So it's risk appetite, isn't it? It's risk management. It's what I think, Martin. You told me this ages ago. He goes, you said to me, Kiki, one of the biggest rules in investing is you never invest what you're not happy to lose. You have to understand.
That's it. One of the biggest things.
Yeah, exactly.
Yeah, but that's more to do with trading, though, right?
Yeah,
I think people have to differentiate between trading and investing, right? There is a huge difference between the two, right? Investing, when we're talking about stocks and shares, I'm looking at a longer term horizon rather than trading. You can be looking at the screen all day, basically, but you're taking a larger position on it. Right, you're taking a larger position on it, and so you need to be doing that, and that's why you're making that money. Whereas on the investing side, you're just dumping it there, maybe leaving it for months or years, whatever it is, and then watching it grow. But yeah, look, both ways. You can make depending on your risk profile, you can be very conservative, can't you? You can be very conservative and just pick, rather than the techie type shares that keep blasting off. You can pick the basic stocks, right? Because they will grow. But it's, again, what's important to remember, guys, is timing. Right? Stock market is all about buying it at the right price. It's just like property, right? And that's why I said before that if you're a good property investor, you've got some traits of being a good trader as well, right? Because the reason why is you need to buy it at the right price, right? So can I just share an example with them, Kiki? Can I? Let me just. Right. So I had a guy. I'm just going to share my screen, right? I had a guy, a friend, a very old school friend, phoned me up. I don't know. Can you see that, Kiki?
Yeah, we can see it.
Okay, Mark phoned me up because he saw one of our videos. He's a blast from the past. He actually said to us, he saw our Bitcoin advert, Bitcoin summary, and then he said, "Listen, I'm into Bitcoin. I want to buy some. How can I buy some? And yeah, I emailed him the graphs, right? I emailed him the graphs, and then so you can see the date, which is why I put that one up. So you can see 20th of November, and then at the bottom it also says if it has a pullback around 600, 1650, I would be buying some at this point. I told him not to buy because it's had a huge run up, right? So the point being of this, hold on. Actually, what I'm going to do, the other thing I'm going to do is, so it's about timing and understanding where we are in the cycle, basically, right? Oh, sorry, while I've got my screen up, Kiki, if it's okay with you. So it's all about timing. You know, Kiki was talking about EVs, and one of the graphs that I wanted to show you is, look, EVs, the EV sales at the moment, by 2030, EV sales are going to reach 26 million units, right? At the moment, they're 3 million units, or they're making their way to 3 million unit. So you can see what EVs are going to do, right? And so you can see why there is such a big buzz. Now, what you tend to find with buzzes is that it does go out of sync, right? It goes into a frothy type environment, which I personally think it is now, right? But it doesn't mean to say, so if you are interested in it, maybe what you do is you, like Mark, the guy who said, you know, he came back. If you keep watching our videos, you'll learn so much content about, if you're interested about buying something, where to buy it. So if we look at Bitcoin again, you know, I talk, this is the reason why I actually said, sorry, Kiki, I'm going to move you over here. When it comes back to this sort of level, that's where you're going to buy it, right? So you can see that it's in a big uptrend. It had a big move, and I said to him, it's approaching an all-time high. What we're going to find is that a lot of people are going to get really excited shorting this thing because they're going to see it as a double top. Correct, Kiki?
Yeah.
They're going to want to short it, and then what's going to happen is it's going to come back and bite their asses, right? So it's not something that, you know, you've got to be a brave man sometimes to short certain things. But on the case of, you know, you're looking at buying entry points, right? That's what you're looking at, buying entry points. Yeah, so that's I mean, I don't know if I've got a Tesla. Let's see. I need to move you again, mate. All right, let's have a look to see if I've got Tesla on here somewhere. Hold on. I've got gold. Tesla, here we go. Right. So if you look at Tesla,
you're giving away everything, Marttand.
You what?
I said you're giving away everything with all your lists.
Oh shit! Oh, okay. All right. Listen, let me stop. I'm gonna. This is for Kiki to do. So I'm gonna. No. Get away, mate. That's fine. It's fine. It's fine. It's cool. Listen, I don't want to steal your thunder. I don't want to steal your thunder. It's fine, man.
Listen, I wasn't saying that. I was saying, you know, your list of all of your stocks. I said I was joking, saying you're giving.
Oh shit! Yeah. The stuff that I'm looking at. Yeah. Okay.
I wasn't going to cover that. Continue. I wasn't going to cover that. That's yours. I'm going to do NIO and XPENG. You do Tesla as well, so you cover that.
Yeah. Okay. All right. So yeah, let's just go back then. Sorry, guys. I don't want to step on Kiki's shoes there. Right. Okay. So let's move him down here. Let's move him down here. Right. So if you look at, you know, what you have to look for is, you know, when we talk about certain buying points, you can see that it's left. I use Bollinger Bands, all sorts of things, but I don't want to make this too complicated for people. So that's why I've done it as it is, with just some simple moving averages, you know, a 5-day, a 9-day, but I do a 20-day moving average as well, right? In fact, I could probably change that to a 20-day moving average. Let's have a look, right? Okay. And then let's just change that to a 50-day moving average to, 50-day, 20 days, so 50-day, right? Depending on how you trade, you know, when you're looking at when you're looking at a longer term, right? If you notice that things actually come back to these points here, can you see that?
Yeah.
Right. So they'll come back to that point. This is quite far extended above the 250-day moving averages. So for me, as a person, if I'm looking to buy Tesla, this is not an entry point for me, right? it's not an entry point for me because it's too far away. It's far too far away. And, when we I think, if people are interested, we're more than happy to do a few courses with you guys to show you, even as not necessarily on a trading perspective, but on an investment perspective. So if I do, that's a 5-year one. So if I do a year one, you can see, and it's still far away. So in year one, you can see the best time to buy it is when it's around this zone. Then it takes off from that zone. So if you had bought it up here, you'd be regretting it, because soon after, look what it did.
Yeah.
And that's what it's going to do here. I'm going to make bets, right, with people. I'm going to make bets with people, with viewers. Tell you what, let's make £10 bets per viewer, right? That Tesla will probably come back to retest that level.
Yeah.
Right. Because it's had a breakout. It will come back. Everything has to come back to retest a breakout level. Right.
Yeah.
So, and I think the euphoria will be after it's joined the S&P, or just prior to the S&P joining. And I see some weakness coming in. So maybe this will start the weakness. But that's what it is. And you will learn more and more from us, Kiki, right? The audience. But please let us know if you're interested in learning more stuff like that. I mean, we covered gold. That's fine. But yeah, so that's done on the EV side. I hope you found that useful, right?
Yeah.
But it is, if you are interested in any of the other stocks, just be patient now. Trading is all about being patient. Bring your property experience back in. It's actually buying at the right price, not paying the retail price that everyone wants to pay. And this also goes for long term. So actually, I'll just go back to one more thing that I was talking about before, right? I was talking about Lloyd's, right? Do you remember I was talking about Lloyd's?
Yeah.
Right?
Yeah.
Right. Look at that.
Yeah.
Look at that. So what I was saying, look at where it is now.
All time.
Look at where it is now. You're kidding me, right? And then another one I was talking about. Sorry, I'm giving some more some of the stuff that I'm following away. Can I find it? I'll find it. That's Lloyd's, Barclays. Actually, we can talk about the Nasdaq. That is extended.
Yeah.
When you look at it on a perspective of how far it is away from those moving averages.
Yeah.
And it some sort of event always occurs. I don't know what it is. And that's why yesterday's video, or the last video, I talked about. Maybe one of the vaccines is not going to work out, or the efficacy of the vaccine is less. I can't find it. It's fine. I had BP. Actually, I could probably put BP in here. Hold on. BP in there. Right. No, it's the LSE.
Yeah.
Huh?
There you go.
Where is it? I can't see it on there. That's on the Nasdaq. It's LSE. Yeah.
LSE. Yeah.
Yeah. Right. You can see where we are. Look at that.
Yeah.
Beyond 2020. Look at that.
Yeah.
Yeah. Granted, BP's got more debt. Now, the other thing is, funny enough, this is how advanced that I think, and I'm not blowing my own trumpet here, right? Funny enough, Barclays came out this week, right, and said, oh, we believe that BP will go to £4. It's undervalued and it's going to have a huge bounce. The other thing that you notice is that when you're away from these, it will come back. It'll either hover around here for ages, or it will try and move back to that level.
Yeah.
Right? Okay, so that's enough of that trading bit. Kiki, you do your stuff, mate. I'm going to put you back.
That's good. I think it's a good insight. I think this is exactly what we need to be showing the audience. So what we'll do is I'll do the same thing with where are we at? Where is mine?
And when you saw the BP graph, it's not. It is about long-termer. I'm not just trading that.
Yeah.
I'm not just trading. I could have made lots of money, but I used it in a different account. I used it in my long-term account.
Yeah, no,
which is my ETF basically, which is my ISA.
that level is a long-term level, not a trading level.
Yeah, man. Hold on to it. It's pay me a dividend. Hold on to it.
Yeah, exactly. 100%. 100%. Close to Tesla. Moving on to Tesla. But if we just look at NIO and XPENG, basically.
Yeah. That's a J curve if I ever saw one, mate.
So this is the pullback and the sort of consult. So this is looking at let's look at a daily actually. Let's look at a daily. So with a daily, we had this sort of period here, and even still yesterday we had a bit of a spike. We had this sort of which we would normally say consolidation, because if you take this down to like a smaller time frame, like a 4 hour, you can see we maxed out at around 54, and then we were in between. Yesterday we just spiked it to 57, and then we were back in between again. But we're looking for these sort of signs to tell us that this thing is definitely is slowing down. What do you think, Marttand?
Yeah, I mean, can you actually get futures prices? Can you get pre-market prices on your?
So the orange line.
Because it dropped. It dropped this week, didn't it? So I'm just wondering, because the American market was shut yesterday.
Yeah.
So I'm just wondering, have you got pre-market at all?
The orange line is pre-market. You see? The orange line.
Oh, okay. That's where it's going to open up. So it's actually going to still open up higher.
It's still opening up higher. Yeah. And with XPENG, we've seen a very so if we look on a 4 hour, compare them both. With XPENG, we're seeing more of yesterday where we've come back, and so my by the way, guys, my moving averages are much smaller than Marttand's, because mine are more from trading, the short term trading. So that's why. But again, if you see on this short term, the same sort of principles. We're staying along and around the blue moving average here that you will see. So these are the sort of areas that we feel are very definitely overextending. These could still keep spiking up. Yesterday again we saw a bit of a spike up going, but we need to be very, very cautious, especially at this period of time. There's a reason why these sort of things are slowing down. So this is exactly what you want to be looking at. So for me, even at this level, if I was to so doing something similar to what you did, if I was to top up on it, say you're asking me, Kiki, okay, cool. So when would you then buy? When would you be looking to buy? I'm looking at key level retracements. I'm looking at where is this thing sort of going to come to. So if we're looking at highs, or if we're coming back, this is one, but we're not nowhere near that. But this would be, if we go down a little bit further, we'll be looking at very, very key levels of, and this is the thing is, what happens when the market just trends upwards, it becomes very, very difficult before a retracement happens, before something happens, to know when this thing will pull back to. It's a similar thing that happens to Bitcoin. Because again, XPENG in this case, we had this IPO in August, so there's not that much data out there, really. There's not that much stuff we can compare, and this is why we say these are the bit of the higher, riskier investments to be looking at. So be cautious, don't get your fingers burnt. We don't know when this thing is going to stop, we don't know when this thing is going to crash, and especially if there's reports coming out where Chinese are investigating companies, all these sort of things are happening. We need to stay with like Marttand said at the beginning, you need to get the fundamentals into play. You need to also look at this from a very practical perspective and a point of view, to be like, hold up a second, I know this has been absolutely smashing it and going up, but is this sustainable? Is this going to keep happening? Is this market absolutely just expanded out? And these are the questions. So charts, look at the charts, have a look. So now if we see on the daily, this is why I wanted to show you this after. Now we see this blue MA. So, you see I put that key zone there, how that, I didn't look at the blue MA, but because I put that key zone there, it automatically comes nicely into play with this MA that we got here. See, this is why it's important to identify these sort of key areas, prices were consolidating. But as I said, it's a bit more difficult with this chart. And obviously I was able to see it because I'm experienced in this now. I've had a lot of chart time to be able to spot these, but your average person wouldn't be able to spot these. But just as an example, like what Marttand was saying, we're going to have this sort of retrace back and hit this this moving average, and then we'll see if it continues going upwards or if it continues going down. So yeah, basically that's it really. That's sort of update.
The thing that I'd like just to add quickly, is you have to think about it as a runner, right? I try to simplify because our audience, because we are a wealth creation site. So it's also understanding not necessarily, the trading mentality would be, so if you were trading, you would wait for pullbacks on the 20, the 5, you've probably got 5-day EMA there, haven't you?
8 and I think it's 8.
Yeah. So, you would wait for that sort of thing to come back, right?
Yeah.
But it's like a runner. What you have to think about is like a sprinter. Eventually they blow out, they get tired, don't they? Right? Yeah. They get tired and they have to have a bloody rest, right? So either they are resting, going, and they're going backwards, or they're just resting and hovering around that sort of price level. If they're resting, hovering around that price level, whatever you do, don't be shorting a stock like that, because it's just waiting to take you to a higher level, right? Exactly. But we'll teach you that. We'll teach you all those principles. Yeah. How many years trading experience have I got?
Yeah.
But so we'll teach you all that. But what we'd like to do is to take you on an investment journey. Kiki and I will, for those people who want to trade, we'll take you on the trading cycle. But I still think that, because at the end of the day, what we don't want to do is, you don't want to just be a full-time trader in front of the screen. How often are you in front of your screen, Kiki?
Well, not much, to be honest with you.
Yeah. Nor mine. So our position sizing, it's all down to position sizing, comfort levels, just leaving it, letting it run.
Not even daily. It's we just look at it when we need to look at it and just leave it.
Yeah, and then just leave it. And it's a case of just we know what. If it drops down here, that's fine. So I tend to, for me, I tend to look at the charts probably 3 or 4 times a day. I probably look at it more than you, because it's on my phone anyway. So I'll just have a quick glimpse of it. But that's about it. But what I don't want to do is be glued to it. But we'll show you all that. But it's also on an investment perspective. You can invest. If you can invest like this sort of thing, take it on a momentum. When the horse is charging, you want to be with it. Yeah. When the horse is charging, you want to be with it.
100%. I think that also just ties in with what we were saying yesterday as well. If people are interested and there's enough interest, and you want to learn, again, this chart work, the basic stocks, how to set up, how to do these charts, how to analyze, and all this kind of stuff, we can create courses, and we will create courses. So if you are interested, let us know in the comments below, or email us at info@infinitywealth.me, so that will come up here. And then let us know if you're interested in learning those. We've had a few people already tell us that there would be, but we need to know that there's enough interest that people would, would consider. And
we're going to make it very affordable as well, Kiki. So it's not going to be, it's not going to be, we're not those kind of people, No. But trying to help you, don't leave your money in the bank. Just try and make it work harder for you.
Yeah, exactly. But that's a good roundup, I think.
Cool. Right.
That's everything.
So are you gonna join me at the weekend, and we're going to do the property one?
100%. There'll be property one.
Okay. So you've got some questions for me, I believe that. So it's going to be a question and answer. One. I think. And I think it'd be good to understand from people, actually, rather than just me speaking, because I enjoy the banter that we've got.
100%.
I still reckon you need a shave, by the way.
You know what?
It's beard, man.
It's my technique for the winter. So when it gets,
that's what it is.
Okay. You grow the beard. So in the summer, it's always short. It's always short, stubbly. Whereas in the winter, you grow. If you forget your scarf, you're covered, mate.
Okay. So you need to get it a bit further so you can get it, so you can get that bit exposed. Yeah.
As the weeks progress, you can watch the videos all in one go. And you will see the beard growing.
We're going to hold you to that. Yeah. So let us know, because we like this format. We like this format. It's very interactive, and I think we're also going to do at some stage, we're going to invite our audience as well to join us, right? So I think Kiki and I will talk about it, where you can ask us questions, and it'll just be a small panel. Won't be too many people, but we'll do it maybe once a month or something like that. That people can come on and ask you a couple of questions.
A max of 10 people. So we're still yet to put the promotions and marketing out for it. So just wait for that. We're going to set a date. It will be in December, the first one, but obviously before Christmas. We'll set a date, and then we'll have a live talk panel. You can come with your questions, and we'll be there to answer them, basically.
Yeah, brilliant. Okay, so we hope you enjoyed it.
Yeah, keep again. Remember, like, subscribe, press the bell notification, and if you need to smash the like button, because the way the YouTube algorithm works is if you don't, you're not going to see our videos in the YouTube feed. So make sure you do. And again, share this. The same challenge applies. If we can get.
We need to grow it. Yeah, we need to grow our audience. Yeah.
Definitely. If this gets to 200 views, you will get that list of stocks.
I mean, we talked about it before. There's the other stocks I've just told you about as well.
Yeah. Well,
I don't want to give the secrets away, but yeah.
But there's many more, isn't there? So
it's tons, man.
If people want that list, then 200 views. So share this with your friends, your family, and fellow investors if they would like this stuff. Again, this is everything in this video that you watched today is all for education and entertainment purposes only. None of this is financial or legal advice. So on that note,
thank you very much.
We'll
speak to you soon.